Hello, I'm Brett Carleton, coming to you from the offices of Heritage Wealth Management here in Houston. So much has happened this past quarter that I thought I'd reflect back on a note I sent out to everyone earlier this quarter, just that I think we're going to see more information coming out of Washington these next 4 years than we've probably ever experienced during our lifetimes. And we've got to be able to filter this out to what's truly important. I think the markets, when Trump was first elected, the thought was there would be more pro-growth, maybe tax reform, issues like that might really cause the economy to begin to grow faster. We saw the stock markets go up. Even earlier this year, we saw stock markets spike. But then once the inauguration and all the talk of tariffs and everything, the market has essentially pulled back some. And really what's led this has been these magnificent seven companies, these Amazons and Apples and Googles that were up so much last year and came into this year priced for perfection, and we probably needed a bit of a pullback there. But they have led the market up last year, and they've led the markets down here this year. Some of the things that we have done in the midst of all this pullback is we've actually taken this as an opportunity to rebalance your portfolios. When things sell off a little bit, we trim some of the things that are doing better and add to the positions that are down a bit. We also have added a new fund with Dimensional that focuses on profitability. Some of these magnificent seven type companies that what they have found at Dimensional is the more profitable companies tend to remain more profitable over time and actually outperform other companies in their sectors. So as we're getting more and more noise, what we look at here is what are things that we can do to continue to monitor and manage the portfolios. And it's the stuff that has always worked. It doesn't matter what administration is in Washington or what things they're talking about. We have to do what consistently works over time, and that's what we're doing here. I've had issues arise about privacy and security concerns about that, and we've looked into that. And it all comes back to this Doge issue, and they're getting into our personal information. All the Doge employees are now federal government employees. They've all gone through background checks, just like the other 2.5 million federal government employees. So again, these news stories that come out to us, I think the first thing we have to do is how does this impact me? If you're concerned about maybe the security and privacy, put a lock on your credit at the different credit agencies or hire one of these credit monitoring agencies to monitor that. I'm actually much more worried about the hackers in this world than I am about our government employees. So as information comes out on these tariffs, things of this nature, as we look at it, really the only country that's been impacted so far has been China. And as we look at what's happened in investment so far this quarter, international stocks are up almost 10% as I speak. Emerging market stocks are up about 5% year to date, with China leading them all by 20%, China's up almost 20% for the year. Who would have ever thought that with all this talk about us taxing their products and them taxing our products? That's why we can't make investment decisions based upon news stories. Real estate, interest rates are still relatively high, but we've seen a nice run up in real estate investments this first quarter. Bonds, of course, with all this volatility or additional volatility, bonds have done quite well. And speaking of volatility, what we've actually experienced is more normal volatility. Last year was so calm, and this year we're getting back to seeing just the more typical type volatility we would expect to see in equity markets. And in spite of the division in this country, we are still the envy of the world. Let me just hit on some of the highlights. We're effectively at full employment with growth in real wages. Inflation continues to come down. We've hit a little bit of a bump, but there's reason to believe that inflation may come down more in spite of this tariff talk. Energy prices, oil prices being the leading one there, are down over 20% off their 52-week highs. And if you remember, oil transportation goes into every product that we buy. Also on the manufacturing side, natural gas prices are beginning to come down too. Both of those are huge components in the cost of manufacturing domestically here. So there's reason to believe that we will continue to see inflation come down to get into the range that the Federal Reserve would hope it would be in. We've seen lower interest rates in the marketplace. In spite of the Fed pausing, interest rates in the marketplace have come down, which has rolled over into lower mortgage rates. And actually in February, we saw a big spike in housing, which is a very positive leading economic indicator. So hopefully we will see more new housing construction, which is very positive for economic growth going forward. And probably the biggest thing is there's been hundreds of billions of dollars of announced investments in the US, both by domestic companies and international companies. So in spite of all this talk, companies around the world still want to be and invest in the US. And this is all what's going on underlying all these headline news stories that have very little impact on actually what's happening. And there's an old saying, and I wrote this in the blog, and I did not come up with this, but it's all about the economy, stupid. I don't like the last part, but I mean, that's what it's about. It's about the underlying economy, and we still have a good growing economy. And there's many reasons to believe that it will continue to grow into this next quarter. So my I guess hope for you is that you will stay focused on things that will affect you in your situation, because that's what we're going to do here. If there's a sell-off in the market, we will use that as an opportunity to rebalance and get set for the future. So having said that, if you have any questions or comments, please share them with us. I know that folks have called us with different things they've heard with concerns and stuff, and we're happy to talk to you about any of those things, but we're always here for you. So thank you for your time today, and we look forward to seeing you in the upcoming year.